Thank you guys for joining us. Special thanks to our sponsors, Independence Arc Farm. We always complain about the big food conglomerates controlling the food supply because they do. And there is something we can do about it, and that's to patronize independent operators like Marco at Independence Arc. Also, American Gold Exchange. Hit the link on our page. Buy physical gold and silver. It doesn't seem like anything in the world is calming down at these moments in time. Seems like the argument for owning gold is getting bigger and bigger. Also, unfilteredinvestor.com. Mike Arnold is the man. Baba Chino is the man. Those guys' technicals are amazing. How are you, boys?
Good. How you doing, bud?
Good. I'm still in Florida, right?
Yeah.
Oh, it's so funny. Last Saturday, when you texted me, I was at the pool. It's about noon, and you said, they're getting the newsletter in today. I thought it was Friday. That's how good of vacation I'm having, and I apologize for that.
No, I think it kind of worked out because I don't know if you got a chance to read it, but it was mostly about crude oil with Iran and everything. So it was kind of in my wheelhouse, and it was pretty easy to write.
Good. And again, I don't I've been saying crude oil all year, but I don't want to take a victory lap when bombs are blowing up. You know what I mean?
No,
it was just,
that's not why you thought it was going higher. So.
That's not why I was going to. I thought that was in many ways already priced into it. But again, have you guys while watching know that I've been a big bull on crude all year? Was up 20% going into this. I actually even thought once the bombs flew that it might pull off a bit, but we'll see about that. Mike, what do you want to start with?
Why don't we talk about crude?
Got to start with crude.
Yeah, let's talk about crude.
I mean, that was.
And again, by the way, those of you guys who subscribe to the unfilteredinvestor.com, my macro take on things is not always the same as Mike's technical take on things. Usually we intersect quite a bit, but so sometimes there's a little bit of I was a bull before they were bulls on the crude thing, but let's now see if it has met the thresholds to be a bullish pattern.
Well, I mean, I've been bullish for this for a while. We've been on Jim's scale anywhere from 0.5 to 1 bullish.
Right. No, you have. I know that. Yeah. Right. Yeah.
And then it was fascinating because last week, this is why I love technicals, because I'm just not smart enough to figure out where everything's going based off of what's happening in the world. I can only use technicals.
Right.
So it's actually funny because last Friday we triggered a technical percent B buy and a rotation zone percent B buy after holding a key pullback support level. And I think I put in, if we were to exceed the next targets higher, my next major target higher, and then we had the bombs start falling, was between 75 and 76. And we opened last night at 75, ran up to 75.33, and then so far is reversed.
It's crazy.
So that was at least to pull off a chunk of longs. It's still remaining cautiously long because we never know what's going to happen when bombs start falling, but at least nailing some of the key gap up technical area, and now watching to see what levels of support hold. I mean, and this is very key. Do you have the chart? If we have the chart up,
it's
up. The weeklies are fascinating because the weekly, here's the 200 on the week back from even 23, the 200 weekly simple was support the whole way through. Then we broke below it in August of 24, July, August of 24, and it's been resistance on every major rally, and we gapped up just under it. So if anybody's wondering where I got the 75 to 76 area, it was right there. So unless that breaks and we turn, something drastically changes and we turn about 75, or you could just call it 76, into support, which theoretically could happen. Anything can happen when, again, the bombs are falling, but that's going to be a very key resistance area. That 75 to 76 is going to be a very key resistance area going forward. So that's what I'm looking at.
So I look at that chart and I say to myself, okay, it was my big play of 2026, ours as well, but I'm not bullish anymore. It's got to prove some things now. It filled out the prophecy, yes?
It filled out the prophecy. Would I pull off all longs? No. Because, again, it's already been an upward bias. Now we have a rising weekly rotation zone. Would I take a chunk of stuff off and look for back to the daily? Look for possibly even a pullback. We already pulled back to a upper level support at 69.50 area, but could we even pull back and fill the whole gap if things quiet down for a couple days?
Sure.
And you know, there's nothing with that significantly impacts crude. Could it backfill all the way to 67? Theoretically, it could. That's why when things like this happen and we go to a very key pre-identified level, I like to take a big chunk of stuff off and then look for pullback patterns.
Which I did not do, by the way. Bobby?
Yeah, I want to talk a little bit about the whole situation. I don't want to talk about whether regime change is right here or whether this is an Israel war or a US war. I don't care about that. There's two main, not that I don't care, but I don't care for the purpose of what we're doing here.
Right.
Right. There's two main things for me though that like I've heard that I just was waiting for the show to address. Number one, and I put this in my article, the killing of the Ayatollah is not just the killing of a prime minister or a president, it's killing of a major religious leader for a certain sect of Muslims. So I think it's more than, okay, it's more than what happened in Venezuela, I guess is what I'm saying.
Sure. Yeah.
Right. The second thing that I want to talk about is the fact that he's the religious leader of a pretty, I don't want to say the whole sect is extreme, but his direct followers were extreme. I don't think they're going away anytime soon. And that's why I think I agree with what Mike's charts say is that I wouldn't take off all of my longs if I had them. I did not have any longs. So I'm not in this. So I'm speaking in a way where I have no skin in the game. So it's easy to say that. But the second part of it to me is when you see a situation like this, the uncertainty becomes one of the bigger things to deal with. And this could potentially change the inflation outlook. One of the things we saw that happen today was short end yields rose. They were the biggest mover on the curve itself. It was short end over long end in terms of the move higher. Now, I didn't see how much they continued during the rest of the session, but Saudi Arabia and the rest of OPEC came out with a surprise increase in production. They were expected to increase production on Sunday by 137 million barrels. They went with 206. All right, so it was a big jump from what the market expected. Generally, they hit with expectations, but the problem is a handful of the producing countries in OPEC plus, Saudi Arabia, UAE, Oman, Iraq, Kuwait, go through the Strait of Hormuz to provide that oil to the globe. Saudi Arabia has some pipeline capacity. I believe Kuwait does as well, but don't quote me on the other country. But the rest of them, it's all seaborne crude going through the straits. So what this move fundamentally now relies on is whether the strait can be blockaded by whatever remains of Iranian forces or not. And then that bleeds because China gets a lot of Russian oil, and they also get a lot of oil from the Middle East, and a lot of it goes through the strait. So does copper now weaken in a protracted way, an extended way, because China's economy, copper, the price of copper now weakened because China's economy now kind of struggles because they're not getting the amount of crude oil they were getting. There's a lot of ripples in this. So I think it's right to look at crude oil first, but I certainly think it's appropriate to look at gold next. Would you guys agree?
No doubt about it. But let's go on the. Did we hit everything we need to do on the crude? Did we go down to a smaller term chart and where you would buy it, where you would sell it, anything like that?
Well, what I'm gonna, just as we talked last month, remember I talked about the secondary reaction in gold, and we'll get to the gold check and we'll recap that in a second. On any pullback, I'm watching some very key levels. I don't think necessarily the pullback is over. We already hit a prior resistance area right around the 69.50 to 70 on the chart. You can see it here. We've already tested that and that held, but if that level breaks, and I'm watching for the full pullback in closer to that 67 and possible the full gap fill. If something, and this is why, if we don't get the pullback and we do we do take out that 75, 50, 76 area, my next targets are 78, 80, And then if we blew through 80, you're looking at probably about 84. So those for anything remaining. And if I take something off, and especially a chunk of it because we hit a big target, if we don't pull back and we do take out these recent highs, I then get greedy with my remaining position
God.
because it could mean a bigger event could take place. So what I would be doing is like if we hit 78, and I don't know if we're going to take out these highs. That's what I'm not what I'm saying.
Right.
But if we did, I'd be raising a stop at 78. I'd be raising a stop at 80, and then I would be looking to unwind unless we pulled back and hit the stop level. I'd be raising. I'd be getting greedy on that rest of the position closer to the mid 80 levels.
Bobby, before we get to gold, can I ask you a quick question? Am I stupid when the United States gets in a conflict these days? I expect it to last about a day or two. To me, it's like Mike Tyson versus me when they go again. And I'm not trying to be some sort of big patriot. That's just what the data has led me to believe. When we talk about the Venezuelan, whatever we did in Venezuela, like 40 guys came in and took on 500, and we got one guy got shot in the leg or something. To me, it seems like the disparity, the power imbalance from a military standpoint has gotten so hugely mammoth. Am I stupid to think that way, Bob?
No, I mean, this is not Venezuela in terms of Iran's military capability, but this is still like the U.S. If this is Mike Tyson versus you, the U.S. versus Venezuela was like Mike Tyson versus your older dog, right? I mean, it's much worse. Iran is definitely much more capable than Venezuela. However, the U.S. is it's just a behemoth. You know, there's no military force on earth that if the U.S. wants to go all in on that they can compete at this point. It would have to be multiples. Plus, it's not just Iran against the U.S. It's Iran against the U.S. It's Iran against Israel, and now it's Iran against Oman, Saudi Arabia, and the other countries that Iran attacked to try and hit U.S. bases. So Saudi Arabia right away said, "Yeah, we're in too because they bombed us." You know, so the issue for me is I don't want to. I personally don't want to see this become another sort of a quagmire that we have to be in because the Islamic Republican Guard is still active. You know, I don't know how that works. I'm not a military strategist, so no, I think you're right. I think major operation should be over soon. But then it's a matter of like, what does it look like on the ground after that? I'll say that, you know, I've seen statistics out there that between 71 and 89% of Iranians living abroad and domestically were against this regime. But that doesn't mean that they have the power to install their own now. It's a shaky situation. I don't think it should have sold off U.S. stocks this morning, which we saw that recover. But I do think it should have rallied gold, which it did.
So let's look at the gold. And by the way, while we're getting up the gold chart, the people who are watching, remember the story in 2025 was that geopolitics were unsettled, and a lot of that had to do with trade wars, and a lot of it had to do with Trump, and global central banks were buying gold. And 2026 was going to be the year, supposedly, we never bought it here at unfilteredinvestor.com or at Futures Edge. We never bought that, but it was supposed to be that 2026 was going to be more relaxed geopolitically. Does it feel more relaxed to you? Because it doesn't to us. Anyway, there's the gold chart, and it doesn't feel more relaxed to the gold chart either.
No, and we talked about this. What I like to do is look for the secondary reactions. We got a major percent B buy. I believe we pointed it out, or we had to set up on the live stream. I know it was pointed out in the Unfiltered Investor. We got a couple other secondary add-ons with 4-hour signals, and then we finally shifted the probabilities. The whole thing on the secondary reaction, when you have a major downdraft like this, I need it to get above the 62.5 on a closing basis to tip the probabilities that we could retest the highs. My targets after we shifted the probabilities. That does not mean we can't get long. I look to get long on the first secondary reaction, but it's a trailing mode until we close above the 62.5, which we did last Monday. We went sideways. We started to rotate back up on Friday. We gapped up on Sunday above the next 5325.9 target. The next target above that is 5476.4. And then if gold does break out to the upside, and I'd be in trailing mode at this point, just trailing again. 57.77 and 59.27 are the next harmonic levels up. A key line in the sand in the short term for me is around this 5100 area on a closing basis. That was the major resistance level that was tested on 4th of February, retested on the 9th, the 10th, the 11th, the 12th, retested on the 20th, and finally managed to then sustain closing basis even on a pullback. We tested that, turning it into support with the rising rotation zone, and it was confirmed when we had the little pullback on Tuesday and then started rotating back up. So that 5100 level is very key. What's interesting is we're going to still have the rising rotation zone, and in a couple more days, that rotation zone is even going to be at that same level.
That's what I thought was going to ask, because you're saying by the time that it finally gets there and closes there, you're assuming that the 21 will be above that level probably as well, right? Yeah.
So,
okay, good.
We could pull back there. That would be a little bigger pullback, but that's my key line in the sand, 5100. If we go to 5100, I'm still would stay long, but that's okay. I need another in order for me to get on, reestablish some. It's always remaining long, just like crude is still remaining long, but it's unwinding some as we hit these key levels because there's no guarantee it's going to go to new highs, and then it's in trailing mode.
Right.
Would I then, if we drop below the 5100, I would then look for buy signals on a daily basis, and if we drop below the 50, which is probably going to be right around this 4850 area in a couple days. If we drop below that, then I'd be very patient with any long setups. Also, in the bigger macro picture, I'm not bearish on gold at all, but if something were to happen, we are in major weekly double top territory also. So for any long-term positions, and I'm talking positions that were established many weeks ago, my key trailing point on anything now is on a closing basis below 44.23. If we were to collapse, don't know what would cause that, but if we were to collapse and close below that, it would trigger a massive potential double top and be out of the way on the weekly rotation zone. And then we could see a more significant pullback in gold. So that's my major line in the sand for long-term gold positions. Other than that, everything else is being traded in the short term, and that 5100 is key.
And Bobby, I want to bring you in here too, but I will remind people too, is that for the last 5 years, Bobby and I have been accused of being gold bugs. The only thing that's changed of our fundamental analysis is that we stopped caring about that about a year ago and stopped defending ourselves, and we're proudly gold bugs. Bob?
Yeah, Mike, am I right in saying that it looks like gold is flirting with its highest close ever?
Yeah.
Oh shit! I didn't even see that. Right? Yeah.
That shocks people.
On a daily basis was on this reversal candle. So the highest close was, and this was on the contract roll also. This is for the contract roll to April. So on the highest close, and we're still on the April contract, it was 53.54 point, so roughly 53.55. It looks like today we're going to close possibly slightly below that. So this will not take out the highest close yet. So that's what I'm saying. There is still significant resistance up here. It's not like we can just say, hey, it's all clear. We're going to 5,900, 6,000. That is not the case. That's why I like to identify the levels that we put out in the newsletter and take something off on the secondary reaction as we get up to those levels, and then just keep trailing. Should it go higher? Fantastic. Should it pull back? Well, at least I got something in the bank, and then I can watch for that pullback and look to reestablish should we get another buy set up on a pullback.
Makes sense. Bob?
Can we, so something that confused me today was the decline in silver.
Yeah, how about that?
Yeah. That I was confused by that. Do you see, well, obviously there's a technical line right there. So go ahead, Mike.
Well, we had the inverse steep neckline, head and shoulders, but this is still the secondary reaction. Remember, gold closed above the 62.5. Silver
Silver.
has not.
Oh, yeah, right. Yeah.
Silver has not shifted the probabilities that it's going to retest the last key highs from the end of January. It's in still the major rollover position. So we gap between the 50 and the 62.5. And I know people have listened to me a long time between the 50 and the 62.5. That is a rollover zone. So it gapped in there and then it rolled over. It's still in trailing mode from it hit the first target, so it's raising stops on the inverse head and shoulders. So it's in trailing mode. At this point, the invalidation point for that move would be if it closed back below 76.42. So it's still in bullish mode. That does not mean we just abandon all hope on silver, but you can see the second target is still in front of the 62.5. So could silver still rotate back up but not close above 62.5 and eventually revert and sell off again? Yeah. I need the key line is 100.08. So just remember, slightly above 100 on a closing basis, 8 cents above 100 is the thing that shifts the probabilities. Until that happens, silver hasn't flipped anything yet.
Bobby, today's move though, try to explain it to me. Bitcoin rallies, gold rallies, silver gets absolutely pummeled. It makes no sense to me unless there's just some whale out there who had just a huge amount of silver to sell, because it all happened at once too. If anyone watching too has any idea or any story, I got nothing on this.
Yeah, I don't have an answer. That's why I asked about the charts.
Yeah,
because
I got no
from my perspective, like when I was preparing my your need to know commentary that I do every day for the CME, I started writing gold and silver are higher. Then I looked at the chart to see how much higher they are, and I saw silver lower. So honestly, I think your guess is as good as any, in terms of, yeah, you know what, maybe somebody just had a huge amount of silver to dump.
Yeah.
The only other thing that I could say is the slight increase in interest rates and the potential increase in inflation coming from crude oil could hurt silver's industrial. But I think I'm reaching when I say
that sounds like a reach, right?
It
And
sounds like a
again, I
reach to me.
appreciate the
So
reach.
I'm just
not
going to
saying.
say I
Yeah.
don't know.
But so Jonathan Barrett asked a question that I want you to take. He says,
Yeah, I
hey,
see
fellas, gold spot is still over $200 from all-time highs. Why would that be when futures are so high? Quite honestly, Jonathan, I'm going to give that to Bobby only because I look at futures. That's how I get price. I rarely ever even look at spot gold. What do you got for that, Bobby?
Well, it's the very nature of futures, right? You see price differentials between ES futures and the S&P all the time. You see it between the NASDAQ and the NASDAQ 100, which is its underlying, all the time.
And it probably is
My
because it's
reason-
knee jerk, right? Like if you need to
Yeah.
get your exposure to gold, you buy the futures quickly. You can't do that in
Exactly.
spot, right?
Exactly. No, you can't do that in spot. There has to be a market for it. So the market in spot, there could be the last spot price traded, but it's so frenetic in spot that there's no actual trading going on.
Right.
So people turn to the futures. I also think the futures, because I've seen this before, Mr. Barrett, in the futures when it's a quick move like this, because it's just the easiest one for people who maybe don't want to actually get exposure to spot, but they want to be in on this move. That's to Jonathan Barnett. I said
Barnett.
Barrett.
I called him Barrett. Barnett. I've been talking to you for 10 years, Jonathan. I'm sorry I mispronounced your last name. It's Barnett.
Yeah, so that's really what it's been for me. Mike, do you have anything to add to that?
No, I love that a lot. That's where the liquidity is, so that's where people go.
Yeah,
Mike?
I was just going to look. See, this was definitely I can't say definitely, but when you see, this is a 5-minute chart I just put up. When you see, silver down from 94 to 88 in the matter of 20 minutes, or 25 minutes, it's definitely something getting dumped. And then it has a secondary reaction and then dumps again. So this is just, you see these kind of patterns even in stocks all the time when there's just generally somebody wants out of something. Here's the back, and now we're just grinding back higher. So the selling ended, and then it's just grinding higher. What's interesting is that still just dipped us into the first cross of daily rotation zone, where it did find some support. And if you're watching this short term, one of my key lines of sand is about this 83.90 to watch for. That's a very key support level. So you can jot that number down for a closing basis. Should silver start dropping back below there, it doesn't mean the bullish short-term thing is wiped out, but I get very cautious.
Interesting. So, Bobby, Bitcoin or short-term rates? Because you made an interesting point about short-term rates, how they went higher, which could be crude and could be inflationary, could be a lot of things. But Bitcoin rallied pretty hard today, which I thought was amazing. On a day like, is it really becoming and fulfilling its prophecy of being like the get out of the system asset?
I mean, it would have to be a lot higher for me to say that. I'm skeptical of the Bitcoin rally because, like, you had so today was about a 4% rally. I'm going to look at it right now, 4.9. You had a 6% rally on Wednesday last week.
Yeah, so
it's like, so that's not an impressive rally based on what happened and based on what some of the Bitcoin people out there are trying to say. They're trying to go, see, it's a flight to safety currency.
Exactly, and they are trying to say
Wednesday?
that. Yeah, right.
What happened Wednesday? What happened on February 6th when it rallied 12.3%?
Yep.
So this to me is not based on the geopolitical tensions. It's based on more of the same. And it is not, to me, Mike, you tell me, it has not broken out of the bottoming pattern to me. Maybe Mike will say different.
No, it's not broken out of the pattern. Still key resistance is around 70,500. And let's look at the bigger picture on Bitcoin. You had the very sloppy head and shoulder top, which came down to virtually the first target. And head and shoulders, I get, because it's the way you measure it with the neckline, I give it a little area right there. It was right around 60,000, and we got down to 60,001. So, would I be surprised to see this even rally? The rotation zone on the weekly is still at 74,000 roughly. Would it shock me even to get to there? Could we even rally back to in the low 80s without destroying still the bearish setup? No. We'd have to get above roughly 85,000 before we start doing technical damage to the bearish patterns.
Interesting. Yeah.
I mean, this came down to massively oversold conditions. The kind of oversold that we haven't seen since 22. We hit those kind of oversold conditions. So am I surprised to see some kind of minor bounce at some point? No, but all we've managed to do since the beginning of February is really move sideways with a slight of ever so slight now developing upward bias, but this has no major bull case yet. Even on a breakout above that 70,500, my first target would be roughly about 74,000. So it's not like I'm going to back up the truck to buy Bitcoin at that point.
What do you want to look at now, Bob?
Do you have more commodities you want to look at? Because I got a lot
of copper. You mentioned copper before, which I think is really interesting in this kind of time of, because by the way, people, I know that everyone who's watching this is a high level of intellect. The story about Iran is a story about China as well. As Bobby alluded to a second ago, most of the Iranian oil goes to China and to Russia. It's probably on the list of why we bombed Iran, that we want to choke them out. And we'll see if copper is respecting and responding to that.
I mean, copper has been in it besides this 2 quick day reversal at the end of January, beginning of February, end of January, really the 29th and 30th. Copper stayed in the trading range between about 563 and 609. So until that happened, until we either break out and get a close, just remember 610 on a closing daily basis, that could potentially turn that into support, or we break down but below 563. It's just range trading for me. I'm keeping an eye on it on this little pullback because we've retested that 609, 610 area the last Friday and today. But unless we start breaking above that, I'm staying into just range trading at this point. There's no real, I wouldn't be overall shorting copper that much, but I will still be looking for potential buy setups on pullbacks as long as 563 holds.
Got it. By the way, we're half hour into the show. We haven't even talked about stocks yet. Do you remember stocks?
They don't exist anymore.
I think people care about stocks, is what I've been told.
Well, what's more interesting than stocks is the 10-year yield today.
Oh yeah, let's do that.
Well, I mean, that technically is percent B buy when it took out Friday's high. There's other stuff patterns before that. With this dip down to the 3.875 in overnight trading, and it's already back above 4%. Now, yeah, it's just tricky to do because we're already in the daily rotation zone. We have major overhead resistance close to 4.09 to 4.1. So this does not mean interest rates are skyrocketing higher on the 10-year yet, but over the next few days, I'm going to be watching how it reacts to the top of this rotation zone and how far it pulls back. And as long as it remains above that 62% retracement on the pullback, I will still be looking for potentially higher prices, or I should say potentially higher yields again, because this did dip below a major. Let me get to the weekly chart. You can see here, last time we dipped in this area was back in April with the tariff tantrum. And look how quickly we reversed. We dipped into this area back in October and we reversed pretty quickly. And now we're getting a buy setup after dipping that area again. There's still a lot of overhead resistance to chew through. That's why I'm going to be carefully monitoring any pullback. But I think we could eventually get at least back to test the 4.2 level over the next few weeks, as long as that pullback does not close back below the 62.5. I wish I could give you that level right now. If this high holds from today, the level would be roughly 3.95. So you can roughly see, as long as we do not close back below 3.95 on a daily basis, then I will still be looking for continued up moves. And if we continue to make highs like tomorrow and the next day, we actually test the whole 21, that level could actually get to about 3.96. But it's going to be in that area. So any pullback to there, I'm still going to be in secondary bounce, short-term bullish. We close below that 3.95 area, then I will just be watching for the retest that breaking down below possibly 3.9 again.
Bullish yields is what he means, not bullish prices.
Yields.
Bullish yields.
Bearish,
Bobby, I'm going to throw it to you, Bobby. On Kudlow the other day, he asked me, I thought 4% was a floor, but I have no idea why 10 years are moving. Please explain to me why they're moving and what's the drumbeat.
Well, I mean, when we're seeing higher yields, you have to say that the price of crude oil, which is one of the main drivers of inflation, is going to push inflation. And then when you see the 2-year yield and moving higher as well, you have to say that if you were to take this to its eventual conclusion, with the 2-year being the closest thing other than SOFR, right, to what the Fed is likely to do, fewer rate cuts, higher inflation, higher yields. That's where I would go with this. Normally in conflicts like this, you see lower yields because people are rushing into treasuries. We're not seeing that here. And I think the inflation story is kind of taken over because, again, I don't think anyone thinks Russia and China are going to join in and fight the United States. So there's not that flight to safety fear. There's that, what does this do to prices in the economy?
Interesting. So what this is telling us, and I agree with you completely, they're telling us that that's the yields now. They're telling us that inflation, this is not a conflict that will last more than a couple days. Otherwise, they would have bought the crap out of bonds. They didn't. Right. They're selling bonds. It's more about inflation. I like what you're saying there a lot. I wish I talked to you before I went on Kudlow.
Yeah. If I could, before we jump into the stock indexes, Mike, Widge is such a loyal watcher of this show, and he promotes us all over the place. He's got a question about a specific stock, and that's rare for him. So, Mike, do you mind looking at General Motors real quick?
No, we can look at that. I just wanted to point out one thing on the actual 10-year, not the yields note futures. Look at this reversal bar.
Wow.
So, again, we hit a very key topping area. So I think we actually had a little flight to safety when the futures opened last night on Sunday night, and that was quickly reversed. And we're even closing below levels we closed at potentially today from the middle of February.
It's right around the time that silver was rallying and then reversed.
Yeah. So now I just wanted to point that out for just the pure 10-year note futures. You want GM?
Yeah, General Motors.
And General Motors, it's bouncing, but a little today after the sell-off, right at the bottom of the weekly rotation zone. But General Motors has definitely lost some technical key levels on on the daily chart. So what I would be looking at this week is to see how it closes in relation to about $78 to see if it can get back above this key this key prior support area, which was actually confirmed on Friday, and then we gap below it today. So it's got to regain that this week. But this is setting up. This is a very sloppy head and shoulders top pattern. It's not going to get triggered today unless it has a downward close. But I'd be watching this again, 77.81 to $78 level all this week. So if you're bullish on that, you don't want it to really close below the 77.80 to finish the week. Because we could then see if this were to trigger, I can already, without looking at the targets, it could break down and possibly reconnect over the next few weeks / months with the daily 200, which will keep rising. So my key area I'd be watching if this were going to break down would be about $68. My first level of support, should the breakdown continue, would be just above 72. And if that weren't to hold, I'd be looking at $68.
Yeah. By the way,
just real quick, we got a comment from Huma. I just want to mention, Huma, if I'm saying your name wrong, whenever somebody puts their name all in one word, I never know really where to stop. But Huma says, very important discussion. I really enjoy it. So thanks for writing that.
Thanks. That's cool. Yeah. Let's go. By the way, Widge, if we get that, thank you for alerting me to this chart, because to me, that's if it starts to fail here, particularly at these levels, that's a spot I look for short. I might be buying some puts in that later in the week if it looks like it's going to close there. So thank you for that. Yeah.
Also, I just put up the targets from the head and shoulder. I said about 72. The first target is 72.98, roughly. Okay. So between 72 and 72.98 would be the first key target, and then the final target is right at the bottom of that support zone, just ahead of that. It's about 68.11, and I said right around 68. So that's where I'd be looking at for downside targets, at least initially, if this does roll over.
Good. Can we go to the indexes, Bobby?
Yeah, we should go to the indexes, because then again, I got like 4 stocks, 3 of which I think will be quick.
Okay, well, let's go quick on this. Yeah.
Key line in the sand. You can see from the middle of December, the dip in the beginning of February, the dip in the middle of February, and the dip today. Not only testing all prior key support areas, but also the 50% harmonic. So I'm paying very close attention on a closing basis from the close on December 17th, which was 67.78.50. So my line is 67.80. Really, I'll just remember it's a nice round number. The 50% harmonic is 67.84. If we do close below that, then I'm looking for the quick downdraft, because that isn't a clear path move, and testing the 62.5, 67.19. We close below 67.19. My target is a reconnection with the 200 simple moving average. That's the downside risk. So just remember that 67.80 level on a daily closing basis. Other than that, this so far is a rounding top formation, which is a potentially bearish setup. So any rally, still, we've been making a series of lower highs. We have to really start getting above 69.81 on a closing basis again before I'm in anything but bounce mode. So at any bounce, we sold off today. We already filled the gap, but we haven't even hit a very key resistance level. About 69.20 is a very key resistance level. Above there, we have closer to 69.60 and then 69.80. So on any continued rallies, I'm still watching for this pattern to potentially stall out. I'll shift my tune if we start getting above 69.81, but that only makes my next target to 7,020 on a closing basis. So there's a lot of heavy lifting. You see, we're virtually still trading at levels that today's close is still going to be below this little big gap up from end of October. So we've gone a whole bunch of nowhere. Yeah, we've gone up, we've gone down, but we're trading at levels at the end of October still.
Yeah. I'll add some to it real quick is that we've had 3 years where the average gain has been 20% for the last 3 years. Okay. If that happens historically, the next year is about 5%, well below the historical 9% average. It's a midterm election year. The historical average on that is about 6%, well below the historical 9% average. If you thought that the first half of 2026 was going to be without some volatility, I think you're crazy. I think we just can't. And again, I love guys like Ryan Dietrich and Tom Lee, but sometimes I don't agree with when they, and I guess I don't even really know how bullish Ryan is, but I know that he was
Ryan's always
relatively bullish.
bullish.
What's that? He's always
Ryan's always bullish.
he's always reasonable, and he's always I mean
Yes.
he's usually right. But right now, I'm not sure that he's going to be right too. So I thought it was going
You
to
know
be
what Ryan
difficult.
does, and this is something I really like about Ryan, Jimmy, is Ryan will say, whenever this happens, 8 months from now, this happens, or 3 months from now, this happens, or 18 months from now, this happens. He never says, buy this dip today.
Yeah,
He
I
just
agree.
tells you that, like, look, over time, it's probably going to be okay.
And
But
he's
that's
right.
not what we're talking about, right? And that's why I like having him on the show, especially when we get situations like this. If this were to be a prolonged downtrend, I'd be trying to slot him in somewhere to get him on the show.
Right, no doubt. And by the way, while we go to the stocks, thank you guys for some of the retweets you've given. I noticed that Art Hogan, our buddy, retweeted us. Art, we haven't had you on in a while. I'm going to get in Bobby's ear about maybe having you on soon. Thank you very much for the retweet. Anybody who gives us a retweet, we really, really appreciate that. Thank you.
Also, I just want
where do you want to go
point out
next,
the
Mike?
weekly chart. Pay attention if we reverse. Pay attention again. That's about 68.20 is where the bottom of the weekly rotation zone is. If we were to reverse this week and close below it, that would be the first weekly close of the rotation zone since it crossed in after the tariff tantrum. So pay a close attention to this because this is also part of the rounding top formation. So I'm watching that very closely. And another thing I'm watching very closely because another reason I've been in cautious, very cautious mode is just on the VIX. It's been, if you look from the end of December, it's been holding this trend line, which was even tested last Thursday, and then we again rocketed higher. So unless we start closing back below this trend line and start really breaking down in volatility, I'm not going to be in overly bullish mode. I'll still watch for some potentially bullish setups, but they are not for to new high setups. Those are for some to target some of those other levels I listed earlier. Unless we start breaking, and we at this point pretty much need to start breaking below 18 on the VIX before I start getting into more bullish mode in the S&P and especially in the Nasdaq, because the NASDAQ is below its weekly rotation zone, and the rotation zone's gone completely flat. And there is a major, it's lopsided, but there still is a major weekly double top pattern in the NASDAQ. And should that trigger on a close below 23,904.50, it would also take out the 50-week exponential moving average. And then there wouldn't be much support below that. So that's another key critical thing I'm watching over the next few weeks.
Yep. Well said, Bobby. Lots said in one sound. Yeah. Well, again, we knew 2026 was not, we've been saying the whole time, we were extremely cautious and it was not going to be a smooth road.
Oh, yeah. By the way, in the short term, for people playing along at home for the NASDAQ, the key level to get me into more very short-term bullish mode, because we have not flipped the probabilities from our last sell-off, is 25,558 on a closing basis. And we're still well below this with this bounce back today. So jot down 25,558 on a closing basis. That's the only thing that shifts my probabilities in the NASDAQ in the near future.
Got it. Bobby, what stocks?
So the first one I want to ask about, it's because Jimmy and I talked about this with Kenny Polcari last week in our live show, which is live too, but our specific live show. We all talked about NVIDIA blowing their earnings out of the water and then the market not rewarding them for that. So I want to know what you think of the NVIDIA chart, because that to me was sort of a warning about the broader market. NVIDIA has been obviously sideways for a while. If this was a 5-year chart, people would be piling out of this stock saying it's going nowhere. But you look from like late last year, it just hasn't really paid. So what do you think of it here, Mike?
Well, we're trading at levels back from July. It's got a whole bunch of nowhere. Boy, how many months is that?
That's coming up on 10 months, isn't it?
Yeah.
8, 10 months.
We have this isn't, it's still valid. We do have a confirmed, but not triggered on a weekly basis, sloppy head and shoulders top. The thing that I need for NVIDIA.
Sloppy head is probably not something we should talk about. But go ahead.
Sloppy head and shoulders.
Sloppy inversing pattern. Good.
I put shoulders in there, Bob.
All right, fair enough.
On purpose. Yeah.
I didn't cut the phrase off early. 196.20 on a weekly closing basis. We did spike above it last week with earnings, but even look on that daily, we spiked above it, and I'm like, oh, this is probably going to invalidate the pattern. No, we closed below it, and then we collapsed, and we finally reconnected with the 200. This is the reconnection with the 200 since last May after the tariff tantrum. Why I also point that out is because, look, if we now actually triggered this not totally correctly formed head and shoulders, is that better?
Yeah, perfect.
All right. If we do trigger that, it would also lose the daily 200. And then I would not be in any bullish mode on NVIDIA until we got a bigger pullback. Do I know what's going to trigger that? No, I don't. But, you could be cautiously bullish trading in a range with NVIDIA as long as that 200 holds. And my major target would be this just above 190, 191 in the short term. Should this bounce hold? But again, if you're looking for something more to shift the probability, it's got to get above 196.20.
Okay, so I want to go rapid fire the next three. And if it's okay with you, I'd like you to end on Oracle. In the newsletter this week, and I actually wrote it in the piece where I wrote it in Jim's spot in the newsletter because he was on vacation, still is. I wrote that I was going to talk about NVIDIA until we had this bombing of Iran, and it just sort of shifted what was important. In that newsletter and in that piece, I also wrote our 3 potential recommendations here, which are VSTS, Tesla, and Oracle, were all double bottoms. So I want you to kind of go over these. And I was very comfortable with that, Jimmy, because the market needed to go back up for us to get long again, right? And I like that in this kind of a situation. Are these still valid, all 3 of them, going from VSTS to Tesla?
What's VSTS real quick?
Vestas Corporation. It's a uniform industrial company.
Oh, got it. Okay. Yeah.
Vestas is still viable as long as it triggers before, let's see, we have 1, 2, 3, 4, 5, 6. 1, 2, 3, 4. So it needs 2 more days to either confirm or trigger. So it's still viable. It's still holding the rotation zone. Still would need a close above, 805 to officially trigger. Trade above 805 stops the clock on the countdown for 2 days. So if we trade above that, but you can see how that's been major resistance. So if this thing can get that close above that, we could have bounced pretty quickly, but it is not triggered yet. You wanted Tesla? Let's see. It still is a valid. Tesla's just bouncing off its 200 also, just like NVIDIA. This is a key line in the sand. We have this extra rotation, but that did not invalidate the pattern. Tesla has to do some real heavy.
That's what I wanted to know.
It's still valid. But it has to move a fair amount. It has to get above 436.35 on a closing basis to officially trigger. But if it loses this area, watch out below. If it does lose, this is not just buy Tesla because there's a potential bullish setup. Any bullish setup right now is a minor bounce pattern because if this, you can see the prior support levels from November and that 200. If we lose this area, we've lost the support from November, which was a double bottom pattern also, and we lose the key 200, and we're into a clear path move lower. So we could be down in the mid 300s before you know it if this loses it.
Okay, and then the last one is Oracle. And the reason I'm bringing up Oracle, similar to Tesla, but different, even if this pattern were invalidated by that extra little rotation there, I like buying it above that level anyway because it's through the rotation zone and the 50 is liable to be down there at that point too.
Yeah, this doesn't invalidate the pattern yet.
Perfect.
This just puts a pattern within a pattern. It did not rise up high enough and pull back far enough to invalidate the pattern.
So our buy, Jimmy, is again, you're on vacation, so I don't expect that you looked at the trades. Is a buy above that peak on what looks like it's about the 9th or the 10th.
Yeah.
Yeah,
I
right
see.
there.
I see exactly what you were looking at, and that's really interesting to me. And again, I'm planning on writing the newsletter on Friday.
That's
Like I said.
amazing right there. What's that?
What is? I'm planning on writing the newsletter again on Friday. I've been paying attention. The second week of my vacation is not as much vacation.
So, I'm happy you got the weekend. I made me happy to do that for you because there's going to be a time where I ask for it, not because I'm some sort of nice guy.
No, exactly. We're all in this transactionally. No, right.
Mike, just explain what you just did here. Redo it and then explain it again to people.
All right, we have a potential double within a double. Okay, so we have they're both valid on a daily setup, but we have a potential double within a double, which I'll be looking at because this could get out of the way of the rotation zone. If it closes above 153.28, we've triggered a minor double pattern with targets of 159.33, 162.35, and I need the first two targets to be in the candle bodies that started to move down. And look where that final target takes us, right to the potential trigger point of the next double. So, and
here's what I want people to notice, Mikey, just real quick. All that is Mike measured it. He didn't say should be the target because he measured it and it landed right on the spot. This is what I love about technical analysis is these patterns end up working together in ways that you don't see unless you're measuring the stuff out.
Yeah, love it. Yeah.
So this is what I call a front run pattern. Why? Because if this triggers, then I'm going to be less aggressive taking it off until we get real close as possible other trigger point because it could roll into an even bigger pattern. So that's why, remember how we've talked about, Bob, raising a stop at the first target, taking something off at the second target. This would be a case where I'd even take off less at the second target. Why? Because this could easily trigger the third target and then roll into a bigger position. And on a weekly basis, I'd be looking at on the bigger thing, I'd be looking at the first and second targets because they're within the rotation zone on the weekly basis. And also look where this is formed on the weekly basis. Look at that. The weekly 200. So does this mean Oracle's going to new highs? No, it means it's got very oversold. We have divergences down here also. We've got waning momentum, and this could be a bounce play that could possibly last a few days to a few weeks. That wouldn't even take us, if you look here, here's the prior breakdown zone. It wouldn't even take us really much above that, should it even get to the third target.
So I want to throw in, Jim, if I could.
Sure.
This is a trade that's in our newsletter that gets delivered Sunday morning, the Unfiltered Investor. Okay, so all our newsletter subscribers already knew about this. Mike is on once a month on this podcast, on this show. So all our subscribers get that every Sunday. You guys just happen to be getting it today. So I wanted to point that out. If you're interested in going to unfilteredinvestor.com, there's a lot of value. There was 20 pages this week. So I'm not giving you a discount, but it's just very, very valuable. I also want to throw in, Mike, real quick, unless Jimmy, you had a question about this.
No.
Okay. The last one I want to look at because I bought this stock just before the show started. Okay. Service Now, the symbol is NAW. Did you know I was going to do that? He just freaking typed it in before I said it. Anyway, I bought this before the show started. Now I'm front running a little bit, which I don't recommend anyone do. So Mike, not only show the pattern, but also show why I shouldn't have bought it yet. My plan is that if it doesn't close above in the next day or so, I'll just exit it for a small loss. Hopefully it's a small loss.
No, this is again a more aggressive play because it is, you can see the weekly double bottom pattern to return it to the into the weekly rotation zone. You're just front running it because it hasn't even closed above on the daily basis. You see if it does do it. This is remember, we have the resistance from the 21 EMA, which it just poked through now. It actually confirmed the pattern, but it has not officially triggered it.
Right.
If you're going to try to get in this, it's again on a close above 110.85. And I can't stress this enough. This is why we're looking at targets, because let's just say you want to even play it for a bigger bounce than just those targets. Look at the major breakdown area. And this has technically flipped the probabilities that we could still see a 90 price point, even after a bounce. So would I be going, oh, I'm backing up the truck for service now and we're going to go, we're going to new highs? No, this is for a bounce play that still could end up failing below the prior major support level, which was taken out in January, retested. You could, the support level I'm looking at is right around this 132 area from back in June of 24. We didn't get quite down there in April of 25, but we then broke it. We retested it and failed. So it's a trade. This is not something, again, I'd be saying, I'm going to put this in my portfolio for years. No, this is a trade to take advantage of, possibly.
Makes sense.
That
All
was
right.
not in the newsletter, everybody. Mike and I were just talking about it earlier. I just remembered that I did text you about it. So
Yeah.
You want to wrap?
yeah, I'm good. That's it.
So this has been, what is it again? Futures Edge. I'm Jim Uriel. That's Bob Acino. That's Mike Arnold. That's Charlie the dog down there on the couch, which, by the way, I've tweeted a lot about Charlie. We adopted her about a year ago, and she's the sweetest, most lovable, most obedient dog, but we might have to get rid of her because she hates our other dog, and that really kind of bums me out. But anyway, that's Charlie behind me here. If anyone is interested in providing a great home for Charlie, come DM me on Twitter, and I'll have to convince my wife that it's the right thing to do. Thank you to our sponsors, Independence Arc Farms, Marco, grass-fed, grass-finished beef. He is the man. You will not be sorry. American Gold Exchange, Dana Samuelson. It seems like the right time to own physical gold. It always seems like the right time to me to own physical gold, but that's just accelerated. Unfilteredinvestor.com. I know we've mentioned about 5 times on the show. I am so pleased to be involved with that because the technical analysis of these two guys is absolutely extraordinary to me. Thank you for joining us on The Futures Edge. Thank you for joining us on